Hi everyone, welcome back to third video of ledger accounts. Now here in this video we are going to understand what are compound journal entries, how do we record them into the journal, and how do we post them into the ledger. Is that okay? Yes. So see, sometimes what can happen is a single transaction will affect many number of accounts, 3 accounts, 4 accounts, 5 accounts, yeah. And to record that transaction, what we do is we don't pass separate entries. No, we combine all the entries into one and we pass the journal entry. That's called compound journal entry, just a combination of many entries. Is that okay? It's just a shortcut. That's all compound journal entries. It's very simple. Sometimes what can happen, you have sold to many people, right? A, B, C, yeah, 3 people, let's say. So now what you can do, rather than passing A account debit to sales, B account debit to sales, C account debit to sales, what you can do, A account debit, B account debit, C account debit, the total amount you will take in the sales. Yeah, so that's what a compound journal entry is. Is that okay? Now let's take this practical question and understand how we are going to pass the journal entries and then post them into the ledger accounts. Is that okay? Right, let's start. Now see, here we have the question. A running business was purchased by Hafi with following assets and liabilities: cash 20,000, land and building 50,000, furniture 10,000, bank loan 30,000. Now here what is happening is this person Hafi has purchased the business along with its assets and liabilities. So now, before purchasing, Hafi didn't have anything. In the Hafi's books, there was nothing. But now what is happening, since he has purchased the assets and liabilities, yeah, with that business, so these things have come into existence in the Hafi's books. So all of these things are increasing in the Hafi's books. Cash is increasing, land and building is increasing, furniture is increasing, bank loan is increasing, isn't it? Out of nothing, yeah, something has come into existence. Yeah, something like that. So all of these things are increasing. So you have to see in which category it falls. Cash account is an asset account, land and building is an asset account, furniture is an asset account. If these 3 things are increasing, that means you have got to debit, isn't it? Asset increases, we have to debit. We know that. That's how we record the assets. So see here, cash account debit 20,000, land and building account debit 50,000, furniture account debit 10,000. Then you have here bank loan. Bank loan is a liability, yeah, it's an obligation. You have to pay the bank loan, right? So bank loan is a liability, so you have to credit that. That bank loan is also increasing, yeah. It was not there before in the Hafi's books. Hafi has purchased the business. All of these things are increasing. You have to record them. So to bank loan account 30,000. Clear? Right. Now you all know the accounting equation, right? You must have heard about it, isn't it? Assets is equal to liability plus capital. Yeah, that's the accounting equation, and it will always hold in the balance sheet. If you see the balance sheet, yeah, of any company, it will always be equal. All right, in the balance sheet, for example, let's talk about horizontal balance sheet. You have liabilities over here, yeah, on the left hand side, and then capital, yeah, capital and liabilities, and then here you have assets, and it will always be equal. So in that case, so this is a balance sheet actually. All these items are shown on the balance sheet of this Hafi's business. All right. So these are the assets and this is the liability. So asset is equal to liability plus capital. See here, 20,000 plus 50,000 plus 10,000. That is equal to what? That is equal to 80,000. 50 plus 10, 60, 20. Yeah, that is 80,000. So 80,000 and then bank loan 30,000. So that means remaining balancing figure that is there in the credit side, that has to be capital. Asset is equal to liability plus capital. That's the accounting equation. It has to be equal. Asset is equal to liability plus capital, right? So this is the liability and this is the capital. You have to take the capital as the balancing figure. All right. So to capital account 50,000. Is that okay? So this is how you have to do it. See, it's very simple. 20,000 plus land and building 50,000 plus furniture account 10,000, that's equal to 80,000, and the liability is 30,000, so minus 30,000, the remaining 50,000 has to be capital to capital account 50,000. That's the rule in accounting we have. Asset will always be equal to liability plus capital. Is that okay? Right. Moving on, then we have next transaction. See here, purchase goods on credit from Ryan 10,000. This is a simple entry. You all know this. Yeah. So this is a credit purchase. What's the entry? You all know this entry. Yeah. We have been seeing this. It's very simple. See, purchases account debit to Ryan account. Yeah. Purchase. We have purchased the goods. Our expense is increasing. We have to debit that purchases. And then Ryan is our creditor. We have an obligation now to pay to Ryan. So he's our liability, creditor, payables. So we have to credit his account to Ryan account 10,000. Is that clear? Right. Next, you have sold goods to Akash on credit for 20,000. So here you are making credit sales to Akash. So Akash is your debtor or receivables. So here's your asset account. Your asset is increasing. Akash is your asset because in the future you are gonna get benefit from Akash. Yeah, he's gonna pay you back, isn't it? So Akash account debit 20,000 you have to take, and then sales is what? Sold goods, right? Sales is revenue, it's income. So to record the income, what you have to do? You have to credit it, isn't it? Sales have credit balance. To increase them, you have to credit that. So Akash account debit to sales account 20,000. Yeah, simple. You know that. Moving on, then you have paid to Ryan 9,000. Now, how much do we owe to Ryan? We had purchased 10,000 worth of goods from Ryan previously. Yeah. Now what we are doing, after some time, we are paying 9,000 to Ryan. See here, paid to Ryan 9,000, and he allowed. Who allowed? Ryan allowed a cash discount of 1,000. Now understand how many accounts are being affected by this transaction. The first is Ryan account. Yeah, of course. And then we have paid money. Yeah, how much? 9,000. So our cash is decreasing by 9,000. So cash account is affected. And then one more account is affected, that is the discount account. Yeah, we have received the discount of 1,000. So discount received is an income for us because we are benefiting from that, isn't it? So discount received is an income account. So 3 accounts are being affected. Ryan account, yeah, we have paid money to Ryan. Our liability to Ryan has been decreasing, and then cash is decreasing because we have paid the money, and then we are getting revenue, we are getting income, that's the discount received. So discount received account is increasing, yeah, because we have got the income, isn't it? You have to record that. So 3 accounts are affected. So how you're going to pass this journal entry? See, it's very simple. See the journal entry over here. Ryan account debit. You will debit the Ryan account with entire 10,000. Why is that? Because you don't have to pay any more money to Ryan. Yeah, because you have got the discount of 1,000. So entire liability 10,000 has been reduced. Yeah, you are gonna debit the Ryan account by 10,000. Ryan account debit 10,000, and then how much money did you pay? You paid 9,000. So to cash account 9,000. Yeah, you're going to decrease the cash account by 9,000. So you're going to credit that. And then, as I said, discount received. You're getting the discount. Yeah, we are paying and we are getting the discount. So discount received is an income. Income have credit balance. To record them, you have to credit that to discount received 1,000. Is that clear? Simple? Yeah. So this is called, what do you say, the payment and discount received entry. See, this is a compound entry, and this is also compound entry. See, many accounts are affected, and here also 3 accounts are affected. Ryan, cash, discount. Is that clear? Right. So this is how you have to do it. Moving on, we have 5th transaction over here. See, cash receipt from Akash 18,000. See here, we sold goods to Akash for how much? 20,000 on credit. Now we are receiving money from Akash 18,000, and we have allowed him a discount of 2,000. So now here what is happening? Think logically. Here we got the discount, that was income. Here we are giving the discount. Yeah, we are allowing the discount. So this is discount allowed. So it's an expense. It's a loss for us. It's a loss, an expense for us. So cash received from Akash 18,000. So the entry would be like this. See here, cash account debit. Yeah, you are getting the cash. Yes, how much? 18,000. And then Akash asset will be reduced by entire 20,000, because in future we are not gonna get any more money from Akash because we have given him discount. So entire 20,000 you are gonna reduce that. Yeah, 20,000 here it was there, right? That entire thing you have to reduce. Is that okay? Because in future you are not gonna get any money from Akash because we have given discount of 2,000. So that discount you have to debit because it is your loss. It is your expense. If expense increases, what do? To record that, you debit it 2,000. Is that clear? So 3 accounts are affected. Cash account is increasing. We have got the money from Akash. We have allowed the discount. Discount is an expense. To record the expense, you have to debit that. And then Akash is your asset and he has paid money to you. So, Akash account is decreasing because in future you are not going to get any money from Akash. So asset is decreasing. Always remember this. It's a very simple thing. When you receive the money from your debtor receivables, what happens? Receivable or your asset or your debtor decreases. Cash increases, but debtor decreases. Yeah. So that's why we have to credit his account to Akash account like that. Yeah. So all those things, of course, but this is the, the way you have to do the compound entries. Okay. It's very simple. It's not difficult at all. Yeah. Here you have to cancel the whole liability, and here you have to cancel the whole asset because you have given the discount over here, and here you have received the discount. Is that clear? Right. Now let's see the ledger accounts, how we are going to do posting of this into the ledger accounts. Now here we have the ledger account. Let's understand how to prepare this, how to post these compound journal entries into these respective ledger accounts. Now you all know that for every name we take in the journal, we have to open a respective ledger account. Yes, so let's start with the first transaction. See, in the first transaction, Happy purchased this business, and when he purchased this business, all these things were already there in that business. Cash was already there, land was already there. Yeah, so all these things were already there. So what you have to do is, when you will do the posting, there is no specific transaction taking place. Yes, business was purchased, yeah, but here these things were already there. So what you have to do is, in Happy's books, you just have to take the opening balances of these items. Listen carefully, you just have to take the opening balances of these items. Is that okay? So let's start. See, cash account has been debited by 20,000. So cash was already there in that business. So what you're gonna do, go to the cash account. Yeah, cash account has debit opening balance. So you're gonna take over here to balance brought down 20,000. The logic is very simple. Cash account has been debited because it was already there. Yeah, the balance was already there. So to balance brought down 20,000. Why it will come on the debit side? Because it's an asset account. Asset account always have debit opening balances. Yep, clear, understood. Let's move on. See here. Next you have land and building account debit 50,000. So when Happy purchased the business, land and building was already there. Yeah, that came along with the business. So again the same thing, opening balance, land and building has been debited because it was already there. To balance brought down 50,000. Is that clear? Simple? Yes. Next you have furniture. Furniture, the same thing, it was already there. It has been debited by 10,000. Go to the furniture account. Furniture account debit because it was already there. Yeah, the balance is already there. So to balance brought down 10,000. Is that clear? Yes. Next you have bank loan account. See here, 30,000. So when Happy purchased the business, there was a loan on the business. Yeah, it's not like Happy took out the loan from the bank. No, it was already there. So you just have to take the opening balance. Is that clear? Right. So go to the bank loan account. See here, bank loan account, it's a liability account. The opening balance of bank loan of the liability account is on the credit side. It's always like that. So you have to take by balance brought down 30,000. Is that clear? Bank loan has been increased because it was already there. By balance brought down 30,000, like that. Is that clear? Next you have capital. See here, to capital account, it's the balancing figure actually. It's not like it was already there. No, it's just the balancing figure. Yeah. So I have already explained you, right? Asset equal to liability plus capital. So that's the balancing figure, 50,000. So capital account has been credited by 50,000. So you have to go to the capital account. Capital account has been credited by 50,000 because it was already there. So opening balance you're gonna take by balance brought down 50,000. Is that clear? Did you understand till here? Yes. Now see here, listen to me very carefully. Land and building, furniture, bank loan, these things, you know, they don't have any more transactions in those accounts. Yeah, if you can see, there are no more transactions in the capital account, land and building account, furniture account and bank loan account. So what you're going to do, immediately close off these accounts. Yeah, by taking their closing balances. Yeah, this was the opening balance, nothing has happened. So by balance carried down 50,000. But of course, in real life what will happen, there will be depreciation over here. In real life I'm talking about. Yeah, but here we are ignoring that. Why? Because here our main focus is to understand how to post the compound journal entries into the, what do you say, ledger accounts. Yeah, that's why I have ignored the depreciation and all that. In furniture account also there will be depreciation over here. Yeah, because as said, they were downs, right? So you have to depreciate them. So here also I have ignored the depreciation, and in bank loan also there will be interest. Yeah, there is no bank which gives you loan without interest. Yeah, so that's what. So furniture also you have to just, you know, ignore the depreciation. Here also ignore the interest. Yeah, and you have to balance these accounts. Yeah, furniture account also only 10,000, this opening balance is there, so that will be the closing balance at the end of the year. By balance carried down 10,000. In the bank loan also closing balance here on the opposite side, to balance carried down, you know, right? It will be on the opposite side. Yeah, then the capital also, what, same way you have to balance it out, to balance carried down 50,000. Yeah, the bigger side on both the side, you know, right, how to do the balance. We have been seeing that past 2 videos now. Clear? You understood that. Now in cash account I didn't balance because there are many transactions there. Yeah, so we'll see that later. Next, the transactions are, see here, second and third entry. Purchase account debit 10,000 to Ryan account 10,000. Now this is a very simple posting, you can easily do this. Yeah, purchases are increasing. Go to the purchase account. See here, purchases are increasing. Purchase account are debited because you have purchased the goods from Ryan. purchase account has been debited because of Ryan. So to Ryan account 10,000. Clear? Now to show the other effect, what you have to do, go to the Ryan account, Ryan account has been increased, yeah, it has been credited, it's a liability account, yeah, Ryan is our creditor, we have purchased the goods on credit from him, we have to pay him, yeah, so he's our liability. So liability is increasing because we have purchased the goods from him 10,000. Clear? Easy. Next you have Akash account debit to sales. We have sold goods to Akash on credit. So Akash is our debtor, receivables. We have to receive money from Akash. So he's our asset. Akash is increasing, yeah, asset is increasing. So go to the Akash account. Akash account has been debited. It is increasing because we have sold goods to him on credit. So to sales account 20,000. Is that clear? To show the other effect, go to the sales account. Sales have been increased. Sales is a revenue account, income account, yeah. So it has credit balance. It has been increased. So you have to credit that because of Akash. We have sold the goods to Akash. So by Akash account 20,000. You know all these things, simple things, right? So these were two entries. Then we have this fourth entry, yeah, the compound entry now. See here, Ryan account debit. We have paid how much? 9,000 to Ryan, and we have got the discount of 1,000. And the liability is entirely reduced by 10,000. Yeah, that's what I told you, isn't it? Yes, that's what happened. Okay. Now, how are you going to do posting of this? See, it's very simple. Go to the Ryan account. Ryan account has been debited by 10,000. Ryan account has been debited by 10,000. Yeah. Why it has been debited? Because we have paid him cash and we have received the discount from him of 1,000. So take that simply. To cash account 9,000, to discount received 1,000. Is that clear? Now what you have to do, show the other effect in the cash account and discount received account. So in the cash account, go to the cash account, see here, cash account, cash has been decreased, cash account has been credited because we have paid to Ryan 9,000, by Ryan account 9,000. Is that clear? Simple. Then the other effect you have to show in the discount received account also. So open the discount received account. Discount received account is an what? Income account. You're receiving the discount, you're getting the benefit. Yeah. So it's an income account. It will always have which balance? Credit balance. Yeah. Credit means plus and debit means minus. Yeah. So discount received means we have received a discount, isn't it? It's a benefit. Is that clear? So discount received you have to record now. So it is increasing. You have to credit that because of Ryan. You have got the discount from whom? From Ryan. So discount received because of Ryan, by Ryan account 1,000. Is that clear? Now there are no more transaction in discount received. So that's why you're gonna what? Balance this out. Okay, so 1,000 on both the sides, and then the deficiency you have to fill it up by to balance carry down 1,000. Clear? Right. Next you have, what do you have next? See here, Ryan account 9,000 plus 1,000, that's equal to 10,000. Here also 10,000. So there is no more balance in the Ryan account, no more closing balance. Yeah, we have paid all the money to Ryan account. Yeah, we have paid 9,000 and we have got the discount, so we don't have to pay any more to Ryan. Ryan account will be finished. Is that okay? Yes. And purchases account also you can close because there are no more purchases. So 10,000 on both the sides, and the deficiency side, yeah, the shortfall you have to fill it up by the closing balance, by balance carried down 10,000. The logic of this is that, you know, in this year we have made this much purchases, 10,000 worth of purchases. Yeah, that's the interpretation. Fine. Now let's move on to the next entry. See here, cash account debit, discount allowed debit to Akash account. Now here what is happening? We have received money from Akash, but we have received only 18,000 because we have given him discount of 2,000. We have given the discount. So this is a loss for us. Understand the difference properly. This was discount received. This is discount allowed. Discount allowed means expense, loss. Yeah, because we are losing the money, right? We are not going to get that 2,000. Is that clear? Right. So that's what. So now what you have to do, go to the Akash account. Yeah, go to the Akash account 20,000. Where is Akash? See here. Akash account has been decreased. Why it has been decreased? Because Akash was our asset. Yeah, we were supposed to receive money from him. If we have received 18,000 and you know we have given him discount of 2,000, that means in future he's not gonna pay us anything. Yeah, so that's why his account is getting credited. It's decreasing over here. Because of what? Because of cash account and discount allowed account. Yeah, because of cash and discount allowed. Akash account has been credited because of cash and because of discount allowed. So that's what you have to take, by cash account, by discount allowed account, 18,000 and 2,000. Is that clear? Right. To show the other effect, you have to go to the cash account. Go to the cash account. What has happened? You have got the money from Akash. So cash account debit because of Akash 18,000. Is that clear? Now everything has been over of cash account also. You can balance this account. 20,000 plus 18,000, that is equal to 38,000. 38,000 on both the side because it's a bigger, right? So on both the side, 38,000 minus 9,000, that is equal to 29,000. This is the shortfall, deficiency. We have to fill that up by the closing balance, right? You understand that. So cash account is over. To show the other effect of this, discount allowed, what you have to do, go to the discount allowed account. Yeah, open a new discount allowed account. Open it. Yeah, discount received account. Discount allowed account. Yeah. So discount allowed account, and what you have to do, discount allowed is an expense. It's a loss. We are losing the money, isn't it? So you have to record this. You have given the discount to whom? To Akash. So discount allowed is an expense account. Yeah. Debit means plus, credit means minus. So discount allowed has been increased. You have to record that. It has been debited, isn't it? Discount allowed has been debited because of Akash. Yeah. Discount allowed has been debited by 2,000 because of Akash. So what are you going to do? Discount allowed has been debited because of Akash 2,000. Don't take 20,000. Okay, don't make that mistake. Discount allowed amount is what? 2,000 only. In this 20,000, 2,000 is there in that. Is that okay? So discount allowed has been debited because of Akash 2,000. Is that clear? Yes. So now you can tally the discount allowed account also. Yeah. So see here, to Akash account 2,000. You can balance it out. Simple. Yeah. So the closing balance on the opposite side, discount allowed has which balance? Tell me. It has debit balance. So closing balance will be on the credit side by balance carried down 2,000. This is the shortfall, right? On this side there will be the balance. Is that clear? Right. So this is over. And then in Akash account also everything is over. See here, sales was there 20,000. Take it on both the sides. And here also it's full. It's tallied by cash account 18,000, by discount allowed 2,000. So did you understand? It's very simple. It's not difficult at all. Yeah, just recognize the accounts from the transaction and use the rules, those 5 rules. Yeah, asset, expense, revenue, liability, capital, whether it is increasing or decreasing, debit or credit according to that, and then just do the journal entry. It's very simple. It's not difficult at all. Discount received is an income, discount allowed is an expense. Yeah, here you are receiving, so you have to credit that. Here you are giving the discount, it's a loss, you have to debit that. Simple. Yeah, this is how you have to do it. Is that clear? Easy? Right. So that's it for this video. Yeah, so the notes for this will be uploaded on our Telegram channel. Okay, I will compile all the basics into one PDF and I will upload it. Okay, fine.